Traders, in today's Institutional Sunday, 27,000 reasons why technical analysis is a load of bull. Traders, how are you? Welcome to another version of Institutional Sunday. Got a brilliant video for you today. I'm going to try and keep it very short. I always say that, but honestly I am. I said at the start 27,000 reasons. So we're going to show you that, why technical analysis is garbage, basically. So you can see this month's performance, 27,000 cash, okay, not some funding account where I don't even know how those things work, but you know, where you're getting like maybe $50 at the end of the month out of it. If it shows 27,000, you know, all of that rubbish, nonsense, made up stuff. This is actual 27,000 cash, okay, in my bank account. I'll show you my live futures account as well, so completely verified, okay, no screenshot rubbish. We're actually going to go into my futures account, so you'll see that basically this was cash generated this month. Been a good month, not been a losing day. That's not always the case, but before that, even more exciting, look at the stuff I've got planned today, right? I'm going to try and cover this all in somehow in like 5-10 minutes, because I'm going to try and keep this one short because I've got some stuff to do today. But anyway, so we can review, you know, obviously as I start off with, always with a small kind of snapshot. We're going to talk about retail sales, geopolitical stuff. Afghanistan in the news this week, obviously probably has had some impact in terms of headline, you know, visuals for investors. COVID, FOMC statement. Going to drill into retail sales really quickly that we had on the Tuesday, and then we're going to look at the week ahead. Should be really interesting. Jackson Hole annual central bankers get together. It's going to be really, really interesting. So I think that's important. If you're not aware of it, or you're not looking at it, and you're only interested in some squiggly lines and you think they're going to help you, heaven help you, okay? Because you ain't going to make money. I'll tell you that right now. And if you think otherwise, send me some evidence, but it's not going to happen, right? So anyway, look, I don't want to come across as negative. It's not that. I'm here to obviously help everyone who does or does not look at institutional methods. In my opinion, proven, 27,000 reasons why they're proven. It's the only way to make money in this market. If you're looking at anything else, you're dreaming. If you're going to make money, you're not. So start looking at this stuff, and I'm here to help you, okay, for free. Cost you nothing. Watch the video. So let's get straight into it. Always have the Barclays logo, okay, just to make clear. Shout out to my ex-employer. I learned most of this stuff when I was working for them. Brilliant investment bank, one of the best in the world. That's where I got most of my knowledge from. So, you know, just a big shout out to them. Thank you, Barclays. But anyway, going on to this week, let's just crack on because we've got not very much time. So on Monday, there wasn't much data. We were up. Usually Monday, as I mentioned in previous Institutional Sundays, we tend to have a little bit of a sideways market. Not to be the case this time. We kind of had a pop higher towards all-time highs again on Monday, and then, as typically happens, turnaround Tuesday came, but this time the other way around, where we had the sell-off, possibly driven by retail sales. Can't be certain. Could have just been people taking off some positioning. You know, down 1%. You can't call that a bad day by any sort, but it was off. Okay, and then we had obviously some geopolitical background during the week with Afghanistan, and then the FOMC statement. I don't really think there was that much in fundamentals that justified the sell-off. I think it's more just the market having that lack of impetus for going up rather than having some fresh data telling it to go down. Okay, that's all it was. We're going to talk about that a little bit. Then we had some positive stuff on Thursday, unemployment claims, and then some consolidation on Friday. We ended the week down barely. Okay, basically it was a sideways week. We were down 0.6%. Month to date, we're actually up 1.06%, okay? Ask yourself honestly, any market you follow, Forex, crypto, whatever, ask yourself right now, what's the month to date percentage change? If you don't know, you know, you need to ask yourself, how seriously are you taking trading? That's why I said that stuff about, you know, all the nonsense at the start. You need to seriously be on the ball with this stuff if you want to make serious money. You know, yes, I made 27,000 this month, but it wasn't by luck, and it wasn't looking at random nonsense lines just jumping around and all of that garbage I see on YouTube. It was serious effort and work that went into it. You know, got pages and pages of research I've done for this video, and also for my own trading. So something to think about. That's why I do these videos. I want you to see how much work goes into trading. It's not easy, okay? And anyone can do it, but you got to put the work in. So anyway, on to retail sales. That was the big surprise. So like I said already, Monday no data, retail sales headline, forget the core, which excludes autos. You know, no need to get complicated and strip things out, and let's just look at one number. It doesn't matter which one you look at, the core or the headline. I'm going to look at the headline. Down 1.1% this week. So let's break that down, okay? Was that possibly a reason why we saw this sell-off on Tuesday, the retail sales number? I don't know, you know. I'm actually of the opinion that yes, it was down 1.1% month on month. We can't say the headline number wasn't weak. It was very weak compared to what was expected. We can see it here. And we've broken this down. But actually, you've got to have some perspective on this number. I don't actually think the market was reacting fully to the retail sales number. I think it was just using it as an excuse to take some profits, and there was a lack of impetus for us to continue making new highs. So instead of it acting as a catalyst for us to go lower, actually, I think there was just a lack of any reason for us to go higher. And I'm going to talk about that, okay? So look, basically the stuff that dragged retail sales down, autos, non-store, food and beverage, these were the sort of things that really saw a big bounce during kind of earlier this year, the post-COVID doldrums. We saw the big bounce in retail sales, and that was all down to these factors. So basically it's just evening out, and we're going to see that. Let's put things in perspective, all right? Some of you might be wondering what on earth I'm talking about. So let me put it into perspective for you. So 1.1% month on month, 16% year on year, okay? So this is the perspective. Forget about that 1 month's number, 1.1%. Who cares? What's actually been happening this year, last year? What's the trend in this number, right? So you can see here using exponential regression since the data series started, so many decades back. We obviously had the post-COVID collapse, and then we've had this kind of overreaction, obviously, as people started getting more into confident buying behavior, getting out a bit, and so on and so forth. So and just having confidence to spend money, right? We've seen the consumer personal expenditures going up and so on, and you can see where we're at, right? Plus 15%. This is on an absolute basis, but I think I've got a percentage chart next. And all we did last week is we just came off a little bit. So let me show you various versions of this if we go forward, right? So here's another version. Let me just get rid of this. Let me just get rid of this. Okay, so you can see here similar sort of picture, you know, compared to the last recession in 2008. So what this picture is saying, it took us 40 months, okay, to reach the peak pre the last recession. This time, 5 months, okay? And we're actually 20% above the previous peak, pre-COVID peak in, what was it, like March 2020. So we're now 20% above, okay? So you've got to realize, even if we're off 1% on the month, what does it mean? Nothing, right? Relative to anything. We're so buoyant at the moment in retail sales. So is it justified that the market sold off because of that? I don't think so, okay? And you can even see it here, the year-on-year trend up close, okay? Still very, very solid, way above anywhere we've been over the last kind of 30 years, okay? So the fact that we've kind of come off this month, we're still up, right? Heavily up. So I think on any measure that you look at, basically retail sales are very, very strong. They just happen to come off kind of the crazy levels that we saw over the recent 2 to 3 months earlier this year. They've just come off, But on a relative basis, they're weak, but on an absolute basis, they're absolutely crazy numbers still, okay? 16% year on year, very, very strong number. And I believe that's one of the reasons why the market rallied towards the latter part of the week, because as kind of the market had chance to digest and, not focus so much on the headline, I think the market started to put things into perspective that, hang on, this number maybe wasn't as weak as we thought. Just moving forward quickly into the FOMC statement, there wasn't really anything new. I've got a little commentary here. The minutes noted that the participants, basically all the committee, have acknowledged continuously that things are moving in the right direction, right? In terms of trying to get to their goal of maximum employment and obviously inflation and so on. Saying that it is temporary high inflation. However, substantial further progress has not yet been met for both goals. So employment still remains this yardstick. So I think, as I said in the last Institutional Sunday, we still need one or two strong employment numbers and obviously continued tick down in the unemployment rate. Then I think the FOMC will have no choice but to start obviously their tapering, and I think that this week, Jackson Hole, it will be a similar sort of rhetoric as we saw in the statement. Kind of wait and see, but committing themselves to going forward with tapering if the employment numbers continue to get strong, okay? And you've seen that we've had a lot of rhetoric from other Fed officials who aren't, but I would say, I noticed that the people saying this stuff, some of them don't have voting rights. This guy doesn't have voting rights until next year in the FOMC. He said if we get another strong labour market report, I think that I would be supportive of announcing in September, and I've been talking about this, towards the end of the year, September, October. I believe there's 3 more fair FOMC meetings scheduled, September, maybe November, December, I can't remember the exact schedule. So there's plenty of time for them to announce when their tapering timetable is going to come about. The point is, I don't think it's a matter of if, okay, it's when. Okay, it's when. It is not if. And that's something that we should be careful of and mindful of. If you don't follow this, you should be, because at the end of the day, this will impact all markets. Crypto, Forex, equities, commodities. Because right now we've got this strange cocktail of COVID, Delta variant rates rising rapidly. We've got the Fed talking about tapering at the same time. So, it's kind of like we're starting to get towards from, risk being very low to some, risk starting to rise of some headwinds in the equity market. The only plus side we had this week was claims, 348,000, 4-week moving average. Hate moving averages, but for data, it's very, very good because this tends to be a very volatile release. You can see basically that the claims number has, this is the long term. So you can see we're now starting to go down towards more long-term kind of levels, but on a microscopic basis, if we drill into kind of the last year, we had this stalling period here. Do you remember when the unemployment rate was steady and the FOMC were constantly saying, we're kind of worried that it's leveled out and it isn't continuing to go down? If you actually see now, claims are starting to now again start to go down on a 4-week basis. I believe it's the lowest number since, again, March 2020. So jobless claims heading in the right direction towards kind of what the FOMC keep saying. They want to see a better, substantial improvement in the employment market, and we're seeing that in claims. We should see this feed through into payrolls, over the next 1 or 2 reports. So I think that is definitely a positive. Having said that, last week we obviously had a lot of other factors ongoing apart from claims, right? So claims on its own is not enough to make the market continue to hit new highs. We kind of ran out of impetus from earnings, because I believe now something like 95, it might be as high as 97% of companies have reported. So, new earnings releases weren't there to give it impetus. Retail sales obviously, was a negative headline number anyway. We also had the Afghanistan situation as well. So whilst I don't think it necessarily has an impact from a fundamental perspective, the Afghanistan situation, it has an impact from a headline, because investors are obviously waking up and reading all these negative headlines, and obviously they do wonder, is that going to have an impact on the US administration and so on and so forth. So look, let's wrap it up here. Like I said, I did want to keep this one a little bit shorter than usual, but still think it's more comprehensive than anything you're going to see, let's be honest. But anyway, this week, what do I think is going to happen? I actually think if we look at the picture as a whole, and we'll have a look at the data calendar very shortly, I think the seasonals, if you go back and watch some of the previous institutional Sundays, if we look at the last kind of 50 to 20 years, we can see September in particular, but August as well, tends to be negative. And I think we may now be seeing some of those seasonals start to have an effect. So even though we're fairly flat this month, up 1%, I think it'll be interesting to see what happens next week as some of these headlines, Delta variants are headlines because everyone sees them. Afghanistan, everyone sees them, these geopolitical things. Some of these seasonals might start coming into effect now, okay? So we may see some, I'm erring on the side of we might see some more sideways to negative movement in the S&P, maybe, okay? I will obviously take it as it comes, sorry about that. And we've got to put things in perspective, okay? Even if we were to get a decent correction, we haven't had a greater than 5% correction in the stock market since, I think it was November 2020. Okay, so we're talking a while, right? The market is in need of a correction. Okay, can you see that's 5%? The last time the market had a 5% correction, we're talking November 2020. So what is that? That's almost, it's like 9 months, right? 3/4 of a year. It's been a long time. So even if we get a correction, it's healthy, okay? It's not going to make me think, oh my God, we're in a bear market. None of that stuff. It's all rubbish. I think that, correction is healthy, even if it does happen. That's my perspective on it. So I'm going to, basically what I mean is if I see the market correcting, I'll obviously try to position myself in some short trades, but I won't start getting obsessed and think, oh my God, let me drop my mortgage on it shorting. Of course not. If anything, I might look at it as an opportunity to get aggressive on the buy side if we see some heavy selling, okay? So that leads us on nicely, just finally onto next week's calendar. I talked about Jackson Hole, the annual meeting, central bank meeting. Okay, we'll see what comes out of the FOMC there. I don't want to really preempt it. I'm going to let the market tell me how it perceives a lot of the comments coming out. I think we're going to see much of the same as what we saw in the FOMC statement, although don't forget the FOMC statement, I believe, was from the meeting prior to the last jobs number. So we might see some more hawkishness, some even more hawkishness. So what we saw in the FOMC statement, plus a little bit more aggression towards hinting that tapering announcements are coming maybe in October, November time. Okay, some people are talking about September, as you saw with that Federal Reserve governor there, but I think it's more likely to be hinting towards announcements slightly later in the year, but we'll see, right? I'll just take it as it comes. Some PMIs as well will be quite interesting. I think the market will look to those. And then that's it really. I don't think there's much else. I think it's going to be just headlines, right? So the Afghanistan situation obviously will continue to cause headlines, as will COVID, right? Those Delta variant case numbers, go and have a look. I show them every week, but they have been going up a lot. So that will cause a lot of headline risk. People seeing that, so that could impact negatively. I think it's going to really be a kind of wait and see week. I'll be surprised, if we do go on to continue to push all-time highs, at least for this week. Okay, this week I think is going to be a little bit of a nervous week for the market heading into Thursday, Friday. Be very interesting to see what happens and how the market perceives any hint of tapering, right? If they give a hint that they're going to taper, don't know how the market's going to take that. And then just finally, what I promised you, I said 27,000 reasons why technical analysis is complete and utter garbage, okay? This is performance month to date, so in about 3 weeks, okay? So the month's still not over, got a whole solid week of trading left, 27,000 cash, okay? I'm going to show you my futures account very quickly and then we're going to wrap it up. So let me just take you to my futures account. Okay, traders, here we are. As many of you know, I use Sierra chart, so just obviously for transparency's sake, no one's going to show you this, okay? Because it doesn't exist. All right, they're just giving you lip service. I'm actually going to show you my. There you go. You can see my order fills from Friday. What else have we got here? There you can see 2,000 on Friday, and just finally trade activity log. Yeah, 1st of August, my live account, right, same account number. No idea why people have to hide this stuff. Like I said, I don't even think they don't even know what they're doing. There you can see 26,962.50. Okay, hopefully it's the same, otherwise I'm gonna look a bit silly. Yep, 26,962.50. Okay, you can see all the stats there. Okay, drawdown $2,337. Short trades 2,000 this month, long trades 25,000. You can see I've got a very bullish bias on the S&P, and that's it. 27,000 reasons why technical analysis is garbage. And if you have even one reason why it isn't, let's have a look, right? I'm always open to it, and I don't mean that in a any sort of antagonistic way at all. I'm always opening to learning new things, but I prefer facts, right? If I'm going to jump out of an aeroplane, I'm going to jump out with someone who's done it before, okay, and shows me evidence. I'm not like most people who just listen blindly to complete rubbish. So you're more than welcome to argue with me. Send me something like this. Show me your account. Show me something that what I'm saying is untrue, not going to happen. More chance of Santa Claus coming and onto this YouTube video right now and saying ho ho ho. Okay, it's not going to happen. All right, so have a great week. Like and subscribe. If you like what you see here and you want to learn institutional trading, the only way to make money in this market, and you don't want to, live in some pipe dream world, then you can watch the free webinar, www.g7fxfreetraining.com. Got tons of free videos as well. Follow me on Instagram @MVForex. Have a brilliant week. Can't wait to speak to you all next time. All right, take care.